Hello, and welcome to the most must-see detective show. Detective Catch here, your very own private investigator. Now let me paint you a picture of a world different from the one you know. A world where the government is not what it seems, where powerful secret societies pull the strings from behind the scenes, and where things worse than you can imagine are still at play. A world where the truth is hidden in plain sight, and only those with the courage to seek it out will ever truly understand the forces that shape our reality. As I delve deeper into this twisted world of horror, I uncover shocking truths that the mainstream media doesn't want you to know. But be warned, as you delve deeper into this sinister world, you may find that the truth is more horrifying than you could have ever imagined. Money is one of the most important aspects of our lives. It is the medium of exchange for goods and services, and we use it to buy the things that are necessary for us to be able to continue living. But have you ever given any thought to the process of how money is generated and how it is controlled? The United States' primary financial institution, commonly referred to simply as the Fed, is called the Federal Reserve. It was established in 1913 with the goals of acting as a lender of last resort, controlling the amount of money in circulation, and maintaining a stable banking system. In spite of its status as a quasi-public institution, the Federal Reserve is completely separate from the federal government. Historically, the value of currency was pegged to the price of gold. This meant that each dollar that was in circulation could be exchanged for a predetermined quantity of gold. This was the benchmark that everyone measured up to. The gold standard was a monetary system that was used in some countries, in which the value of a country's currency was tied to the price of gold. This meant that each monetary unit, such as a dollar, could be exchanged for a predetermined quantity of gold at any time. For instance, in the United States of America, the gold standard was introduced toward the end of the 19th century. This standard established that $1 is equivalent to approximately 25.8 grains of gold. The gold standard was implemented to assist in avoiding inflation and preserving the purchasing power of currency. This is because there was a cap placed on the total amount of currency that could be issued due to the quantity of gold that was kept in reserve. If the government intended to print more money, the first thing it needed to do was stock up on more gold. Because of this, the money supply was able to maintain a relatively stable level, and rapid inflation was avoided as a result. Nevertheless, during the 1970s, the United States and a large number of other countries moved away from the gold standard and adopted a currency system based on fiat money. A currency that is not backed by a physical commodity such as gold, but is instead declared to be legal tender by the government, is referred to as a fiat currency. The ability of a government to continue to earn the trust and confidence of its citizens in the currency is a significant factor in determining the value of a fiat currency. In the case of the United States of America, the choice to abandon the gold standard was made as a reaction to the growing demands placed on the country's gold reserve during the period of economic growth and inflation that occurred in the 1970s. The United States was able to increase the money supply without having to acquire more gold after it abandoned the gold standard, which made it possible for the country to fight inflation and finance economic growth at the same time. The creation of new money and the maintenance of existing levels of circulation are both important responsibilities of the Federal Reserve. It achieves this goal by deciding the levels of interest rates, purchasing and selling government securities, and lending money to financial institutions. The Federal Reserve can shape the economy to their liking by exercising control over the quantity of money in circulation. The Federal Reserve's ability to buy and sell government securities is another instrument it employs to control the amount of money in circulation. When the Federal Reserve buys government securities, it injects money into the economy. This leads to an increase in the money supply, which in turn encourages economic expansion. On the other hand, when the Fed sells government securities, it removes money from circulation in the economy. This results in a lower overall money supply, which can assist in bringing inflation under control. In addition, the Fed lends money to banks, which is an activity that is vital to the functioning of the banking system, as well as the economy as a whole. This type of lending is known as open market operations, and it plays an important role in ensuring that financial institutions have the liquidity they require in order to lend money to their clients. The use of fractional reserve banking is an essential component of the overall banking system. The remaining portion of a bank's deposit liabilities can be loaned out under this system, while the banks are required to hold only a portion of their total deposit liabilities in reserve. This signifies that whenever a person deposits money into a bank, the bank has the ability to lend out a portion of that money to other customers in the form of loans or loans at interest. This results in the creation of a multiplier effect, in which a relatively modest sum of money in the form of reserves can result in the creation of a significantly greater sum of money in the form of loans. On the other hand, this also indicates that banks have the ability to create money out of thin air by lending out more money than they actually have on deposit. The Federal Reserve plays an essential part in ensuring the integrity of the fractional reserve banking system and ensuring that it functions in a secure and reliable manner through its oversight responsibilities. The Federal Reserve is able to help maintain stability in the economy and prevent severe fluctuations in economic activity, thanks to its control over the money supply and its ability to influence interest rate levels. The Federal Reserve is a type of central bank that is extremely important to the functioning of the United States monetary and financial system. Despite the fact that it is generally acknowledged as a significant component of the economy, it is not devoid of the controversies that surround it. The Federal Reserve has, over the course of its history, been the target of criticism from a wide variety of quarters. The Federal Reserve System is frequently criticized on the grounds that it wields an excessive amount of power. There are those who believe that the Federal Reserve has the ability to influence the money supply, as well as interest rates, both of which can have significant repercussions for the economy. The Federal Reserve has the power to influence economic growth, as well as inflation and unemployment rates, because it controls these levers. One more complaint about the Fed is that it does not provide sufficient levels of transparency. Some people believe that the Federal Reserve conducts its business in a manner that is shrouded in mystery, making its actions and decisions difficult to comprehend. They argue that the Federal Reserve should be more open and accountable to the public, and that its actions should be easier to scrutinize. In addition, they want more scrutiny placed on the Fed's interest rate decisions. One more argument leveled against the Fed is that it is susceptible to political influence. They contend that the Federal Reserve is subject to influence from the government and political leaders, and that the Fed's decisions are more heavily influenced by political factors than they are by economic ones. Concerns have also been expressed regarding the possibility of conflicts of interest, arising from the fact that certain members of the Fed's Board of Governors have extensive connections within the financial industry. In conclusion, money is a multifaceted and interesting subject that plays an important role in all of our lives. Understanding the function of the Federal Reserve and the development of our country's monetary system is essential. Despite the fact that we may take these things for granted, it is also essential to take into account the ongoing discussions and arguments that surround the Federal Reserve and the direction that money will go in the future. And that concludes today's episode. But like always, remember that we must unite as a community while the world around us continues to twist and corrupt. In the face of uncertainty, we must stand together in support of one another. You are helping our channel by liking, subscribing, and sharing this video, as well as promoting awareness and community cohesion. Only together can we overcome the darkness and meet any obstacle that arises. As a result, I kindly request that you take a moment to like this video, subscribe to our channel, and share it with your loved ones. Let's unite and grow stronger collectively. Thank you for watching, and until next time, stay vigilant.